Hello, dividend growth stock investors. It is Colby, the DGI Crab, coming at you today with the Great ETF Race, episode 8. Every other Tuesday, I'm doing a video showing off how I am adding $5 every single week to 8 popular dividend growth ETFs to see which one is going to come out on top. The point of the series is to show that anyone can invest and get a nice passive income stream going without a lot of money to start out with, or even a ton of knowledge or desire to research individual dividend growth stocks. You can just pick an ETF or two, or maybe even 8, and you can build up a nice passive dividend income stream over time. None of this should be taken as financial advice, as I'm not a licensed professional advisor. You should always do your own due diligence. But with that, let's get into the race and take a look and see where our racers are at. If this is your first time here, know that I am doing this ETF race on the SoFi platform. SoFi makes it very simple to set up automated investments for as little as $5 an investment. You can automate the entire process and have an investment go in for a certain amount of money every single week or every 2 weeks or however often you think is appropriate for your particular style. I have the 8 ETFs sitting right here in my SoFi account. And I've also got a couple of individual dividend growth stocks here, LRCX and the recently added Walmart. Now, these are as a result of viewers clicking on the link in the description below and signing up for SoFi. Click on my referral link, sign up for SoFi. You will get some free money out of them for setting it up and funding your account. You do have to put money in there to get your bonus. But if you do so, all you have to do is then send me an email, dgicrab@yahoo.com, and let me know what you would like me to invest my part of that referral bonus into. So long as it pays a dividend and it's not one of these 8 ETFs, I will buy it and I will hold it forever. So that's where I've got the LRCX and Walmart factoring in here. I don't do this for the money, but I just thought that would be a lot of fun. So if you've got something you'd like to see me invest in, sign up for SoFi, get you some money, and hey, you can help me add to my portfolio with a stock that you really like. So I am going to switch over to my Excel just so we can see some of our data points a little bit more clearly here and out in the open. So our SPYD, the State Street High Dividend Yield ETF, is still holding on to the top position, not by a lot, but it is still holding on to that top position. The 80 highest yielding stocks in the S&P 500 are what make up this ETF, and it's performed quite well so far since we started up. Now, since I do this episode every other Tuesday, every time we do a new one, there's an additional $10 invested into each of these ETFs, as I typically will do that every Monday, add the $5 each. Up to $80 now invested in each of them across the board, and they have all paid out at least a single round of dividends. The monthly paying DHS has paid us out a few months worth up to this point in time. So SPYD and DHS remain on top. We've had a bit of a rally here from VBR, the Vanguard Small Cap Value ETF. It's pulled its way up into the 3rd position. The 4 Vanguard funds were actually the 4 on the bottom last week. So it's nice to see VBR as well as VYM rallying and doing a little bit better than they have been. They've slipped past SCHD, the internet's favorite dividend ETF. And then we've got DGRO, VIG, and VYMI, the international dividend ETF, bringing up the rear. So where are we standing here? Well, let's look at where we're at. So we've got $640 total invested now across these 8 ETFs at 80 apiece. They have paid out $3.75 so far in dividends. All dividends are automatically reinvested back into the ETF that paid them out. So the drip is just turned on across the board for them all. Still sitting on a nice overall gain. All 8 of them are up, not in the red on any of them so far. So you'll see up $34.36 as of right now. So most of that has come from a share price appreciation as opposed to dividends. But as time goes on, we're going to get more and more dividends paid into these. So far, as you can see, we've only got about half of these. Do I even have a full share? So we're buying fractional shares, just $5 a pop. VYMI, DGRO, SCHD, which recently did a 3-for-1 split, and SPYD all have more than a single share. Still working towards that on DHS, VYM, VIG, and and VBR. So these are just higher individual share price, but share price does not matter to me as far as the ETFs are concerned, so long as you've got that ability to buy fractional shares like you do with SoFi and so many other investment platforms now. The overall price of the share really doesn't make much of an impact. That's been a big topic of discussion with SCHD, who's done that 3-for-1 stock split, going from 80 something a share down to 28 a share, but 3xing the amount of shares that are out there. Now, if you have a brokerage account that does not allow for fractional shares, where you can only buy full shares, then a split like this is really useful, because obviously it's a lot easier to invest in something for $28 than it is to invest in something for $203. So will Vanguard or any of the other major players in this space take their cue from Schwab and start doing stock splits on their ETFs? Time will tell, but to me it doesn't really matter one way or the other. They can either do them or not do them, and it doesn't impact my decision on the quality of the ETF in the least. But it can be more convenient for people to buy them if they are still using a brokerage where they have to buy the full shares. Did cross a minor threshold here, so the annual forward dividend income is now surpassed $20. So minor victory. I'll go ahead and take that one right to the bank. Yield on cost still sitting at 3.17%. This number will gradually continue to increase over the long haul as more dividends get paid out and get reinvested into the underlying asset. But for yet another week, SPYD remains on top of the pile. I've got to say, I'm a little bit surprised by that. SPYD, I know, is going to pay out more money in dividends in the short term than most of these other ones will. But that being said, I expect the share price on SPYD to maybe be the one that does the worst of the 8. So maybe here in a year or two, SPYD is going to regress back to the mean and maybe be more in the middle or towards the lower end of this. But for right now, yet another week where it remains on top. So what do you all think? Which one of these ETFs is going to be at the top of the pile at the end of 2024? Let me know what you think down in the comments below. Which one of these is your favorite of the 8 ETFs that I have selected? Is any of these new information to you? Have you not heard of some of these? I know that Wisdom Tree's DHS is very little discussed. I went into that one a little bit more in depth in episode 7 and why I like that one. It's the only monthly payer that's on here. But I'm definitely encouraged by the progress that this one is making. Certainly, I'll be even more happy when we get even more dividends put in here. DHS might have an edge by the time we get into early December, because I'll have a couple more monthly dividends paid out for October and November by the time we roll around to that point in time, and the other 7 will still be waiting on just their Q4 dividend distribution. But hey, we'll wait and see what happens with these. But I love all 8 of these for their own reasons. I think that you should definitely take into consideration your age and time horizon with ETFs, just like I would say the same thing with individual growth stocks. I think that VIG, DGRO, and VBR are all excellent options if you're between the ages of, say, like 18 to 40, 41, sort of in there. I think you're going to get good, solid price appreciation as well as dividend increases with those. And then as you move into your 40s, SCHD, VYM, and DHS are all fine options, a little bit higher starting yield, still good solid growth, but maybe not as rapid as a VIG or DGRO in the dividend growth department. And then SPYD is an excellent choice, in my opinion, for those that are up in their 50s and they're looking to acquire higher yield quickly. And for me, VYMI is the only non-US stock holding that I have. I am a major fan of this ETF. I've done several videos on that already. And I put 5% of my new investment capital into this one every single week to keep building up that position. So that rounds out another episode of the Great ETF Race. Man, I can't believe we're already 8 episodes into this series. Thank you so much for coming along for the ride and seeing the progression of this portfolio as I add to it over time. Slowly but steady wins the race as far as this crab is concerned. Please email me any questions that you may have at dgicrab@yahoo.com. I will always respond to you with an email. And if it's a question that requires maybe a little bit more of a discussion or a longer answer, with your permission, of course, I will do a video response so we can all learn together and make each other better dividend growth stock investors. That's what I want this channel to be about, the community, learning from each other, and helping us all reach our shared goal of financial freedom. That's another episode of the Great ETF Race in the books. Thanks you once again for joining me. Talk to you next time, y'all.